Hi there, happy Monday. Welcome to The Open here on BNN Bloomberg. Let's get to those big stories we're bringing you from our newsroom. Shares in Allied Gold moving up a bit in the pre-market. China's Zijin Mining has agreed to buy the gold producer in a deal valued at $5.5 billion. It's a premium, but not a massive one. And you can see the stock up about 4% right now. The acquisition will add 3 African mines to Zijin's portfolio that are set to produce up to 400,000 ounces of gold. And of course, that comes as bullion prices surged today past $5,100 US an ounce. And actually, we just talked to the CEO of Allied last week, Peter Maroney. You can find that at our website at bnnbloomberg.ca. China says a preliminary trade deal with Canada acknowledges a new type of strategic partnership and is not aimed at the United States. This comes after Washington threatened 100% tariffs on Canadian goods if Canada strikes a trade deal with China. Now, this partial agreement between Beijing and Ottawa would ease Chinese tariffs on Canadian canola and other agricultural products and allow visa-free travel for Canadians. Ottawa is seeking to diversify trade amid an escalating Canada-US trade war. OPEC Plus is likely to maintain its oil production pause for March. According to Bloomberg, the oil cartel will review its decision to freeze output levels during the first quarter, but is expected to leave the policy unchanged. OPEC has been dealing with a global surplus and, of course, geopolitical risks. According to Bloomberg, a significant supply disruption from events in Venezuela and Iran could prompt the organization to actually bolster production. And there is a look at U.S. futures. Looks like we're going to get a mixed open today, no clear direction. Let's check out how Toronto stocks traded last week, and it looks like we should see another boost for the miners today with gold topping $5,100 US. Let's have a look at oil. Amid all this geopolitical turmoil, oil has been remarkably stable, slipping a little bit this morning. And drum roll, let's have a look at gold. Our latest quote on that, the April futures, and you can see just shy of 5,100 right now. And a quick check on the Canadian dollar. Amid talk that globally investors are becoming increasingly wary of unpredictability from Washington. And finally, Bitcoin, the biggest crypto company that has sagged lately, but edging up a little bit today. As companies actually begin using artificial intelligence in their operations, our next guest is in the camp that said investors are shifting their focus from tech companies that build AI infrastructure to those who are actually using the thing to improve efficiency and execution. Let's get more from Eric Jackson, founder and president at EMJ Capital. Eric, thanks very much indeed for joining us. We have seen some selling in the Mag 7 stocks. They've been lagging. And you think that people are trying to move on from the actual build out of AI, even though it's going to be lasting for years yet, and looking for people really using it effectively?
Hey, Andy, yes, I think so. I mean, one of the things that's also been interesting just in the last 6 months or so has just been the rise of the Russell 2000 again, much maligned. And I think the two are related. The kind of sagging interest in the Mag 7 and the increased interest in Russell 2000, and it kind of does coincide with this 2026 trend, which I'm playing for, Andy, which is basically looking for smaller companies, lesser known companies who are actually taking AI, putting it into practice, and seeing the benefits sort of pay off in their earnings in 2026.
Do you think it's the dogs in the street, of course, are barking that OpenAI may well run into trouble with its big debt and minuscule revenue compared to its spending right now. If OpenAI runs into trouble, do you think that will cast a shadow over the entire AI sector?
Well, yeah, they and all these other companies are, there's a high degree of correlation between them, and then a spillover effect that does affect the markets in general, of course. And so, if there's any kind of growth scare, or if there are ever, were ever any signs this year of people pulling back on capex spending or the purchase of new NVIDIA chips, that would cast a shadow for sure. But I guess the trend that I'm suggesting people watch out for is I do think like one of the questions hanging over the whole AI space has been the payoff for these $1 billion of capex spend that seemingly go on quarter after quarter, year after year. And like people want to see like, well, when's there going to be evidence that this really makes us some money? I do think that we will see evidence of that in spades. We've sort of seen this the last few months. Obviously the traditional software firms like SAP, Salesforce, and players, CRM players like that, have really pulled back and lagged the market. I think that's sort of like a precursor move to, where AI is hurting some immediately, but we haven't yet seen the success stories, the case studies, the poster children of where AI is directly benefiting them beyond just the NVIDIAs and the OpenAIs. And I think we're going to see that this year.
Can we get to some stocks? We have talked to you about these ones before. Open Door, you've long been a fan of this stock. What's your take now on it?
So they're taking AI and applying it to consumer real estate, basically. First in the U.S., but then worldwide. And they're led by a new CEO since September, Kaz Nejatian, a Canadian guy who left the number 2 job at Shopify. He just had to kind of stick around, keep his head down, and he would have taken over for Toby there and been rewarded with like hundreds of millions of dollars in stock options. He said, no, I want to leave Shopify because I see greener pastures in this small upstart Open Door and how they could apply AI to the world of real estate. Imagine never having to deal with a real estate agent again. I mean, I know I would appreciate that, Andy. Never having people kind of go through your house for a viewing, but do it all online. Making immediate cash offers for your house, seeing the money show up in your bank account 3 days later. This is what Open Door is trying to unlock. Kaz just started in September. Stock's down maybe like 40% since then, and you get a lot of people, grumpy people saying, oh, when's this thing going to move? Well, he's only really had one earnings call as a CEO, and that was reporting on numbers from the prior CEO's tenure. So at the end of February, we're going to have Kaz's first time to shine over a quarter that he was there the entire time. He's already made some allusions to the fact that it used to take Open Door, like 11 people would have to be involved in making an offer on your house when you went to their website or app and asked for a quote. And now it's down to 1, just in less than a quarter. And that's using AI. So I think we're going to see in this quarter coming up, evidence that they've cut costs in terms of headcount. They've got greater efficiencies. And the payoff, obviously Rome wasn't built in a day. This company is not going to be a 100-bagger in one quarter. But I really expect to see some evidence that this is on a similar kind of Carvana-type 100x path over the next several years.
Your next idea, Hut 8, and before we get into it, of course, they are a player in, they have been a player in crypto. But Eric, give me your take, if you would. Why is crypto down so much from its highs?
Well, it's been a bit of a slap in the face for all the crypto bros who've missed out on gold's and silver's run. But I am bullish on crypto. I mean, I think I think we got a big pullback that started in October with some kind of forced deleveraging that had to happen with a sort of stable coin mispricing on Binance, one of the big exchanges. And it seemed to have this like spillover effect. And there's such margin that's sort of built up in crypto that's really taken the whole space down. And then it sort of pulled tech equities down. I think it's a pause, though. I do think that we're going to see Bitcoin come back, to all-time highs in 2026. Then you have players like Hut 8, and I've spoken about Iron and Cypher before, who used to be just like pure play Bitcoin miners. They've recently diversified into using that kind of knowledge of how to run data centers to do Bitcoin mining to get into AI data centers, building out of the AI data centers. But there's no question, like when crypto goes up, names like Hut 8 also go along for the ride. So there is a correlation. It's not one-to-one when they were a pure play miner before.
We've only got 30 seconds, literally. Nextdoor, this is a stock you favored as well. What's the latest on them?
So this is another kind of AI payoff play. They're thought of as sort of like just a failed Yelp type local information business about your neighborhood. But what's different about them, Andy, is they've got 100 million registered users. So you have to verify you live at a certain address to get on there, including they have some Canadian neighborhoods as well that participate in this. And that means there's no spam on this network. So you get information about, hey, is there a local dog walker I can use, a plumber, and so forth. But what's interesting about Nextdoor is they haven't yet leveraged AI to say that, hey, Andy, we've got a plumber or an eaves trough, window washer, whatever, coming to your neighborhood next Thursday afternoon, and I know this is something you've searched about before on our platform. Would you like to use this person because your neighbor 3 doors down tried them and liked them, and we'll give you a 30% discount because they don't have the extra travel time. They're coming to your neighborhood anyway. That's a kind of like lead gen type revenue unlock opportunities that exist in the world of AI today, which never existed before, and they're very valuable for people. So it's a business where I think it's going to be seen as sort of valued more like a Reddit type of business, because there's such value in those 100 million users on the platform instead of this Yelp type business. And that's sort of like the valuation mismatch that excites me most about Nextdoor going into 2026. It's also a long-term potential 100-bagger.
100-bagger, okay. Eric, thank you very much indeed. Always great hearing from you. Eric Jackson, founder and president of EMJ Capital. Coming up, Eastern Canada digging out after that major winter storm, which walloped Ontario, Quebec, and the Maritimes with up to 60 centimetres, 2 feet of snow dumped in the Toronto area. Oh, tell me about it. I was shoveling last night. We'll have more after the break. Wild winter storm hit parts of Ontario and Quebec this weekend, with more than half of all the flights at Toronto's Pearson Airport being cancelled. Let's get more from CTV's Scott Hurst. Scott, there's rough weather almost everywhere in Canada. We're talking about sub-zero temperatures, lots of snow. Where has it hit the hardest?
Good morning, Andrew. Ontario, Quebec being hit significantly hard, and now this storm also impacting the Maritimes, but not just that portion of Canada. This storm stretching all the way down the eastern seaboard of the U.S. and even impacting flights as far south as Texas, dealing with snow as well throughout the weekend. You mentioned the flights at Pearson. Of course, it'll be a multi-day cleanup at the airport, and a significant amount of flights canceled yesterday. As you're looking at video from yesterday of the cleanup, trying to get the runways clear for the planes to continue, and already today about a quarter of departing and arriving flights canceled for the day, and many others delayed, trying to deal with the snow. Is record setting at Pearson, in fact, in terms of a daily snowfall total, and already record setting for the month of January at Pearson Airport as well. In parts of Toronto, Andrew, some 40 to 60 centimeters fell, and in many questions, as people are trying to dig out their driveways, dig out their cars, the question now is, where does all that snow go with snowbanks and snow piles, trying to shovel it off your driveway, getting higher than 6-7 feet in times, and making it very difficult to keep up with how much snow fell yesterday, in fact.
It is like the curse of Sisyphus, isn't it, in Greek mythology? You throw the snow onto the big bank, and then it comes sliding down again.
Yeah.
Anyway, the U.S. is also battling its own monster storm, and that has turned deadly. Tell us more about that.
Yeah, it has turned deadly, and there are also states of emergency that have been declared in more than 24 states, and so far 11 deaths in the U.S. blamed on the weather, from winter storm to freezing rain, in impacting so many parts of the country and impacting so many people. More than 185 million people in the U.S. were under some sort of winter weather warning or alert this weekend. And to single out yesterday, there were more than 12,000 flight cancellations across the U.S., Andrew, with now making Sunday the worst day for flight cancellations in the U.S. since the pandemic. So that really puts it into perspective with how widespread the impact from the storm really was across the U.S. and Canada.
Thank you very much, Scott. Really appreciate it.
Thanks, Andrew.
Okay, we better move on. Canada's Arctic makes up an incredible 40% of the country's total landmass, but just 0.5% of its GDP. Now, sure, the region is filled with rich minerals, but production of them has been lagging compared to adversaries who are interested in this part of the world. CTV's Heather Wright has more in this report.
Come on. Come on, guys.
There are few things more quintessentially Arctic than being pulled by a sled dog across a frozen lake.
In the wintertime, we offer kick sled tours pulled by huskies. Good boy, bud. Good boy.
Richard McIntosh is the co-owner of Sundog Adventures and says tourism in the north continues to grow.
Rum, come on, Rum.
Attracting not only visitors, but also employing thousands of people.
We hire guides every year, and we hire service staff every year. But without the tourism, we wouldn't be able to employ nearly as many people.
Canada's Arctic makes up 40% of its total landmass, but just 0.5% of its GDP, according to government figures. Mining continues to be the main industry in the Arctic, but insiders say the full potential of resources here remains untapped.
There's 2 gold mines in proximity.
Karen Costello is the executive director of the Chamber of Mines and says more government investment is needed in the north, not only to attract private investment, but to beef up security as well.
You can't get more present than that. When mining is here, mining employs Northerners. It works with Indigenous businesses, Indigenous development corps.
Canada's Arctic economy is quickly changing. Warming seas and increasing global demand for critical minerals and natural gas have intensified competition in this region.
Everybody is in this infrastructure race.
Brendan Bell is the CEO of West Kitikmeot Resources, an Inuit-owned company spearheading the development of the deep water port and extensive road network, known as the Economic and Security Corridor. It's a massive project with a number of environmental concerns, but if completed, it would connect Nunavut with Canada's highway system in the Northwest Territories.
Canada has lagged significantly behind both our adversaries and our allies who are interested in this part of the world. So I think we're left with very, very few options here, but to make some significant investments.
Well, Canada has some of the largest reserves of critical minerals, which are used in everything from smartphones to cars. It lags significantly behind countries like China in the ability to process them. It's another area experts say is in need of investment.
Opening bells are coming up next. Okay, we're still a little bit away from the actual market open. Still a few minutes. I was jumping ahead there. For the past 2 years, more breweries have closed than opened. The pandemic, of course, stopped people going out. Tariffs, inflation, all of that has eaten into the sale of Canadian beer. Consumers, in many cases, are still going out less often. They want to cut back on spending. CTV's Alison Bamford has more in this report.
Taps are flowing at Regina's Rebellion Brewing, despite turbulent times over the last 5 years.
We've worked really hard, really diligently to get our business in order, to get our sales in order.
The pandemic, inflation, and changing consumer behavior set back Canada's craft beer industry. A report from Restaurants Canada shows 41% of Canadians reduced their alcohol consumption over the last year, citing health concerns, lifestyle changes, and money as the main drivers.
Consumers are going out less frequently, so you're seeing less beer sales in restaurants and bars and things like that, and craft breweries as well.
Canadian beer sales dropped 20% from 2019 to 2025.
It used to be you could just open your doors and sell a bunch of beer. That's just not the case anymore.
For the last 2 years, more Canadian breweries have closed than opened, a trend not seen in 15 years, according to beer educator Jason Foster. His stats show the total number of breweries dropped 2.9% in 2025, a gradual reduction he expects will continue for the next couple years.
The breweries that'll be left at the end of it, I think, will be stronger and the better for it.
Brewers say fluctuation is normal in any industry, and the taps aren't drying up. The latest numbers show craft beer sales are up year over year in Saskatchewan and Alberta. At Rebellion, sales have jumped for the last 6 months, and the Regina-based brewery is opening a new tap room in Saskatoon.
We're feeling really confident going into 2026.
And that's something he'll drink to. Allison Bamford, CTV News, Saskatoon.
Let's have a look at U.S. futures as we count down to those opening bells. And it looks as though the S&P will open marginally higher, but only by around 0.1%. And we could get, well, let's just call it a flat NASDAQ at the open. Just to give you a scorecard for stocks so far this year, as of Friday's close, year to date, we've got the S&P 500 up 1%. NASDAQ up 1%, 1.1%. Toronto has outperformed with this huge move up in gold stocks, for example. It's up almost 5% so far this year. Let's have another look at Allied Gold in the pre-market. It's going to be taken over by Zijin of China. Allied Gold, of course, is saying, well, this is a 27% premium compared to the old, that's how the stock traded on Friday, compared to the old 30-day volume-weighted average. But if you actually compare the premium here to Friday's close, it's only about 5%. Okay, that's after a massive run-up in Allied Gold shares. We'll also be watching the gold space. Pan American Silver was up in pre-market trading. My latest price on spot gold, if you can bear with me for 1 second, because that can be a good benchmark for the overall gold price. We are looking at $5,077, a new record for the yellow metal. We have the opening bells next. And here are the opening bells at the NASDAQ. Atlas Critical Minerals is doing the honors. In New York, they're welcoming CNBC to the podium to celebrate the 20th anniversary of CNBC's Squawk on the Street. It's time for the first 50. Let's check in on the equity markets as we get going here. And there is Toronto. 330. And let me just check if that is a new record high. U.S. stocks are not, as far as I know, back there. No, they're still sub 7,000. Toronto, yep, trading in record territory once again. And of course, it's going to be helped today by gold stocks, with gold hitting new record highs at one point, apparently topping 5,100, and it's not far short of that right now. So Toronto hitting new record highs. A couple of stocks that we're looking at here. Allied Gold being taken out by China's Zijin, and there's the stock moving up. Remember, the premium to Friday's close is only about 4 or 5%, although the company is saying if you look back at the volume-weighted 30-day average, it's more like 27%. One other stock, maybe we could put up BTO, because BTO is also big in African mining, as Allied Gold is. Allied Gold is a major mine in Mali, and so does B2 Gold. And that stock moving up about 2%. And let's have a quick look at oil here, because that has been gyrating modestly over the past few weeks with threats to supply and then no supply, diminishing threats. The giant Tengiz oil field in Kazakhstan is set for a restart. It looked like they were having a power supply problem, but and they had two fires. Yeah, two fires at power generators. The country's daily output set to average just 1 to 1.1 million barrels a day this month. Let's have a look. I'm curious, maybe we could put up NVIDIA. A one-year chart for NVIDIA, always a great benchmark for sentiment in the U.S. tech space. And you can see NVIDIA right now well down from its highs. The company, as usual, though, throwing money around. It's investing another $2 billion US in CoreWeave to help speed up efforts to add more than 5 gigawatts of AI computing capacity by 2030. And CoreWeave, so they're investing $2 billion, and then as part of the deal, CoreWeave will be among the first to deploy forthcoming NVIDIA products. So that's one of these circular deals that the market, the tech people are so keen on right now. Let's have a quick look at Royal Bank of Canada, because when Canadian investors, there's CoreWeave, when Canadian investors are feeling chuffed, often they do reach for good old RBC, and that stock right now down slightly to 3.1. So Royal Bank of Canada 2.31. So that one has come off its record highs as well. Let me just check what the high for 2.31. That stock was 2.40 in January 6th, so not so long ago. And let's have a look at copper, because it's been such an exciting story, hitting its own record highs over the past few months. And whoops, there you have it, up at 1%. Let's head over to Ottawa. The Prime Minister has been discussing food affordability and changes to GST credits.
More affordable for everyone. That's why we're stepping up today to help people who need it the most. Because we can't control what other countries do, but we can control how we support each other during tough times. We can control what we build so that these times will be better in the future. We choose to build Canada strong for all Canadians. Thank you very much. Merci, and I look forward to your questions.
Thank you, Prime Minister. We'll now begin the question portion of the press conference. On va maintenant commencer les questions. Première question, Tom.
Hi, Prime Minister. Tom Perry with CBC. Since your speech in Davos, we've had Donald Trump threaten fresh tariffs on Canada if we cut a deal with China. He's rescinded your invitation to the Board of Peace. He started calling you governor, like he did your predecessor. I'd like to know what you think about all that, and what impact you think your speech had on Canada-U.S. relations.
Well, I think the first thing is that my comments in Davos laid out how we see the world, a recognition of how the world has changed. I think a point that Canadians understood months ago. In fact, I think Canada understood the scale of the change in U.S. trade policy, what it meant for our economy. We understood that well before other countries, and we started to react, controlling what we can control, building it at home, and very importantly, diversifying our trade partners abroad. That second bit is a positive thing. It's finding new partners. I mentioned in my remarks 12 new trade and security agreements in the past 6 months across 4 continents, more to come. For example, the commitment with India to work together is just one of many. And all of that builds our strength here at home, provides more opportunities, makes us less dependent on the United States. Last point. We are entering soon a negotiation or review formally of CUSMA, our agreement, as you know, with the United States and Mexico. It'll be a robust review is the expectation. The president is a strong negotiator, and I think some of these comments and positioning should be viewed in the broader context of that.
Going back to Davos as well, the president was interviewed on Fox News, and he talked about NATO troops and NATO troops staying back from the front in Afghanistan. I'm wondering if you think the president should apologize for that. On a secondary topic, on Greenland, he backed down from threats on Greenland. Do you think that's settled? Would Canada send troops to Greenland to support their European allies?
So let me be absolutely clear. With respect to the contribution, what everyone should recognize, Canadians recognize, and we are fundamentally grateful for the extraordinary contributions of the men and women of the Canadian Armed Forces in a variety of theaters, including very much Afghanistan. We were the first to invoke Article 5. We were the first to send support after 9/11 to New York City. We sent 40,000 Canadian troops serving over 13 years on the front lines in Afghanistan. In Kandahar, as one example, 158 of those soldiers paid the ultimate sacrifice. One of our diplomats paid the ultimate sacrifice. Thousands more were injured. 30 of our soldiers won the American Bronze Star for service in combat, for courage in combat. It's an extraordinary contribution for liberty, for freedom, for human rights, defending the United States, defending Canadian values. Everyone should recognize that. All Canadians are in their debt. Now, I think you had a second part, but
on Greenland.
On Greenland.
Do you think that's settled, or and would you consider?
I think that I thought from the start the following, which is, and this is a point, by the way, I made at the NATO summit in June. The importance of reinforcing Arctic security across the entire Arctic theater, to use that term, which very much includes Greenland, Northern Arctic, the Nordic countries as well. It has been the view of this government that NATO has not put enough emphasis on that. Canada is putting emphasis since we've come into office. We put emphasis on that. And that the solution to the security needs of Greenland, but the entire Arctic region, is coordinated through NATO. First and foremost, Canada will take responsibility for our Arctic, but working in conjunction with others. We have close and deepening cooperation with the Nordic Baltic 8 group of countries. I've met with the NATO Secretary General on a couple of occasions, 3 occasions now, about this issue. And I think by reinforcing that security umbrella, it addresses the fundamental needs of those countries. Denmark addresses the fundamental needs of Greenland, helps support security in Canada. So that aspect is very much taken care of. Thank you.
Morning, Prime Minister. Mike with CTV News. I just want to follow up on what Tom was asking. Are you offended by being called governor?
I mean, I think in this role you get called a lot of things, a lot of time, and I'm not going to comment on every tweet or truth or comment from whoever. So I can handle it.
As a follow-up,
but I do think this point about our troops is fundamental, and respecting our troops and the contribution that they've made.
I want to follow up on what you were saying yesterday outside of cabinet or caucus. You said that Canada isn't pursuing a free trade agreement with China. What efforts are you or your ministers making with the Trump administration to communicate that to them so that those threats of tariffs stop?
Well, I interpreted the president's comments exactly that way, which is looking forward to were we pursuing a deeper free trade agreement. We've made it clear. My fellow members of cabinet, ministers, have made it clear to their counterparts that that's the case. We've made the public point. And it's obvious. Look, Canada, when we sign an agreement, we sign a trade agreement, in this case, USMCA, as they call it, or CUSMA, as we call it. There is a clause in that agreement, Article 32.10, I believe, which says that you will not have, you have to give notice, in effect, if you're pursuing a free trade agreement with a, quote, non-market economy. That's in the eye of the beholder who defines it, but it's a definition of any of the other parties who see somebody as a non-market economy. China is one of 15 or 17 economies that the U.S. views as non-market. I can understand why they say that. So we got an agreement. If we were even considering that, which we are not and never have, we would have given notice, and then there's a very open and transparent process. Thank you.
Bonjour, M. Carnier. Michel Sabat, La Presse canadienne. Avez-vous des excuses à présenter aux Québécois et aux francophones du Canada pour vos propos sur les plaines? Et êtes-vous confortable à être le chef du camp du non lors d'un éventuel référendum sur la souveraineté du Québec?
En ce qui concerne mes commentaires, j'ai commencé par reconnaître la lutte des francophones au début, pendant l'histoire du Canada. Et j'ai mentionné, même souligné, les efforts de certains dans notre histoire de poursuivre une politique d'assimilation. Par exemple, le report de Durham est un exemple. Il y a d'autres plus sévères que ça. Et c'est à cause, j'ai dit, c'est à cause de la résilience du peuple francophone qu'on crée le Canada, un Canada qui reconnaît deux peuples fondateurs et après un certain temps, trois peuples fondateurs, y compris le peuple autochtone. Alors, c'est un processus.
Prime Minister taking questions from reporters. Naturally, he was asked about Greenland and really came out with the party line. Arctic security is the concern of our nation and our NATO partners. Refusing to comment on US President Donald Trump's latest poke at him, calling him a governor, as Trump did with his Mr. Carney's predecessor, Trudeau and Mr. Trudeau. Now, they also announced what they're calling affordability measures, an increase in the GST tax credit for people below a certain household income. It's going to be, those quarterly GST payments will increase by 25% over the next 5 years. So that's targeted at generally the lower segment of the population. And there's going to be a special one-time payment in June equal to a 50% increase in the value of the GST credit. And they are they're calling it the Canada Groceries and Essentials Benefit. And an eligible family of four may get about an extra $800 Canadian in relief this year. A single person may get about $400 more. Right, so let's get back to the broader market and earnings season. Our guest is focused on the energy and materials sector, both of which have been climbing this year. As of this morning, they were up more than 9% year to date. Let's get more from Brian Mulberry, Senior Client Portfolio Manager at Zacks Investment Management. Brian, always great to see you. Thank you very much indeed.
Thank you.
Just to clarify, are we talking U.S. or Canadian stocks here mostly?
Well, both, because really the raw materials are what at play here. Copper, as you were talking about before, is a major contributor to what we're trying to do in growing the power that's going to feed into AI data centers. So what we're finding is the CapEx spending from those very large tech companies is starting to land on the balance sheet of mining and materials companies, in that we just simply need more of that raw material in order to provide copper to wire data centers, grow the power grid across, boundaries, if you will.
What would be your favorite way of playing copper? ETFs are a little hard to find in this space. There are moves to launch them, I know. Would you buy the likes of a Freeport McMoran, for example?
Right, exactly. Or, even an Albemarle or a Newport, something along those lines that are actually directly involved in the mining and processing. Obviously, the smelting and refining of copper is going to be a big part of this as well. So I would like any of those names. And then on the offset of that, in the same energy lane, looking at those utilities companies that are going to be actually producing the electricity that runs on the copper, obviously, that's a way to offset it as well.
What about uranium stocks? They've had a magnificent run.
Yeah, absolutely. I think the expectation globally is that there's going to be more nuclear power generated. It's just a process of getting those new power plants online, but definitely they need that raw material in order to make it happen. So yes, I think those mining stocks, again, even something like a 3M that's going to be directly involved in actually getting the material out of the ground, those are great ways to play the spend that's actually happening.
How are you handling the big defense stocks? Are you attracted to the likes of Lockheed Martin, for example, right now?
I am. And obviously, there's growing defense spending, which is always good for their bottom line. They have some very durable government contracts. But also at the same time, their expertise in a lot of this really intricate engineering that's going to happen in the build out of data centers makes them an applicable play in the AI spend as well. So they're starting to contribute to some of the design work, if you will, in these very large construction projects that have been happening, in both countries.
It sounds like you are watching investor wariness over some of these giant AI names. I mean, we saw a big correction in Oracle, for example, amid debt concerns, ORCL. Are you steering clear of some of these tech names?
Well, I think the question is starting to be properly asked, and that is, with all of this spending that's happening, we're approaching, $1 trillion in CapEx spending for AI infrastructure just in the next couple of years. When does that come back to these technology companies, and will it be a profitable investment on their part? In the meantime, before we wait that out, we just simply follow the money, knowing that they're spending real dollars on building AI infrastructure. We go to the companies that are benefiting from that. And that's why we like some of these other sectors rather than just continuing to own the same Mag 7 names plus Oracle, Broadcom, Palantir. There's a way to simply follow the money that they're spending to grow the overall compute picture, which eventually will come back around to them, but might take another couple of years to get that compute capacity to grow where they need it to be.
What about the big U.S. banks? There's talk there's going to be a whole bunch of mergers and acquisitions this year, perhaps in technology, and perhaps a whole bunch of high-profile IPOs. That'll be good for the Wall Street banks.
Yeah, that investment banking part would be a really nice growth source. We saw obviously some trading volume that really boosted revenues for a lot of the larger banks last week. We saw, earnings up roughly 19% year over year. That's helping to boost profitability just from the trading volume. If that then transitions into more of the investment banking, then we would absolutely be excited about financial services right now. In the meantime, we've got a Fed meeting here in the U.S. this week. It's a 97% likelihood that nothing happens. And so that means the cost of capital is remaining static. In order to get to that IPO market and those mergers and acquisitions, we need to see the cost of capital come down, because that would be more of a growth impetus for these companies to actually engage in those transactions. As long as the 10-year Treasury here in the U.S. is above 4.2, it's really difficult to see those structures of transactions coming down. So really what we want to see is the long end of the yield curve come down. Once we get below 4% of the 10-year, a lot more of these deals become more likely.
Let's put up a chart for the 10-year bond yield, maybe over the past 5 years. What was the crucial, the possible catalyst? What level of the 10-year bond?
I think under 4 for the U.S. Treasury is an appropriate level where you'll start to see an acceleration in deal making, both in the IPO side, but also on the M&A side. Now, the thing is, here we've had 6 rate cuts over the last 18 months, but the 10-year has been sticky over that 4% number, at one point reaching 4.5%. Coming back down, and we're kind of settled into this range at around 4.1 to 4.2. We've got to get that lower by 25 to 30 basis points or more before you're going to see any real increase in deal making.
And what SpaceX is going to be a huge one, presumably this year. It could be one of the biggest ever. Do you think? I know it's very early, but do you think that'll be an IPO you'd be interested in?
I would say yes. I mean, I think that they've built a business here that makes a lot of sense. There's already a revenue stream that you could project future earnings growth on, and you could see the road to profitability. They just simply have the most, I think, cost-efficient, repeatable process to get men and material into space. Yeah, I think that would be definitely a very exciting name, no doubt about it.
We'd better go. Thank you very much indeed. I really appreciate it.
Thank you.
Okay, we've got to take a break. Lots more action coming up on The Open. Oh, just a reminder that on Friday on Market Call, we were joined by David Driscoll, President and CEO at Liberty International Investment Management. He was covering global stocks. His top picks were Santec, Littelfuse, Keyence. And today on the show, it's Mike Vinokur, Portfolio Manager and Senior Wealth Advisor at Propellus Wealth Partners, IA Private Wealth. And Mike will be taking your questions on North American large caps. Let's check in now on the markets and see what's on the move. In particular, we're interested in the behavior of the gold stocks today, with bullion hitting new highs. Last time I checked, it was just below $5,100 US an ounce, but it did at one point get above $5,100. It's setting new record highs today. So let's have a look at the U.S. markets just to kick us off here. And they, of course, are up now. At one point, I think it was last week or maybe the week before, we saw the U.S. stocks slipping into negative territory for the year, but they now are narrowly ahead. Okay, well, let's stick with this tech theme. ByteDance of China has emerged from the TikTok saga with what one investor or one observer calls a major win on U.S. access. Let's get more from BNN contributor John Ehrlichman. John hosts Ticker Take on YouTube. John, thank you very much indeed. What should we bear in mind about ByteDance and TikTok?
Well, this obviously is a storyline that at one moment, Andy, was consuming so much of the markets because of the rapid rise of ByteDance through TikTok in the U.S. And where we stand now is that TikTok will be able to continue in the U.S. Because they have reached this deal, which will bring in a number of American investors to lower the ownership stake that ByteDance has in the U.S. arm, and perhaps more importantly, to those who were concerned about the influence ByteDance had through TikTok in the U.S., that you'll have Oracle, which is a key player in this deal, that has, at least the understanding is, more control over what content Americans see. You know, if there was a concern that there was messaging coming from China previously, this is supposed to address that. I think the bigger story, though, Andy, for ByteDance, to your point, is that this is a win for a quickly growing Chinese force. The way the social media landscape works right now, TikTok is right up there with all of Meta's properties and other platforms like YouTube. And the fact that the Chinese government didn't really put up roadblocks at this point speaks to their own concerns, perhaps around, big tech issues that we're grappling with, like AI, and less so about how ByteDance is treated in the U.S. I think there was an argument being made that this actually is seen as a positive by China because it allows for one of their top players to continue in the American market.
It is interesting, the power of TikTok. I'm trying to cut back on these apps, John. They're such a time black hole.
Yes. Well, in terms of, whether you're talking about connecting the dots to influential people at the White House or just the time suck that is TikTok. It's interesting. We'll never quite know the full story on the lobbying side behind closed doors. But obviously, President Trump had some ties to someone who was deeply invested in ByteDance. But, it'll be interesting to see how Meta reacts as well, because they have been quite a competitor with this company. So lots to watch.
John, thank you very much indeed. John
Thanks, Andy.
Ehrlichman, he hosts Ticker Take on YouTube, and check out our website, bnnbloomberg.ca, for his stories. Just ahead, we're going to get a Wall Street view on what to expect from the Federal Reserve this week. We'll be right back. Welcome to the second hour of The Open. Let's get to the big stories we're bringing you from our newsroom. Prime Minister Mark Carney has launched what the government is calling the Canada Groceries and Essentials Benefit, aimed at raising the goods and services tax credit for eligible families and individuals in an effort to cut back on the cost of living. Starting this year, GST payments will increase by 25% over 5 years. And Ottawa will also provide a one-time special payment in June, equivalent to 50% of the GST credit. Carney says the payments are to make up for the higher level of food prices since the pandemic. And you can see Allied Gold moving up today. That's after China's Zijin Gold agreed to buy the Canadian gold producer in a transaction valued at $5.5 billion, with shareholders receiving $44 per share in cash. Not much of a premium to Friday's close, as you can see. The acquisition adds 3 African assets to Zijin's portfolio that are set to produce up to 40,000 ounces of gold, and it comes after bullion prices surged today above $5,100 US an ounce. China says that trade truce with Canada acknowledges a new type of strategic partnership and is not aimed at the United States. This comes after Washington threatened 100% tariffs on Canadian goods if this country strikes a trade deal with Beijing, although it's not immediately clear what exactly the White House is referring to here, whether it's a comprehensive trade agreement. This latest preliminary trade deal between China and Canada would ease Chinese tariffs on Canadian canola and other agriculture exports and allow visa-free travel for Canadians. Ottawa is seeking to diversify trade amid escalating Canada-US trade tensions. And there is a look at the TSX Composite. It has hit a new record high today, spurred once again by big moves up in gold, with gold at record high territories. And over the past year, you can see our market, excluding dividends, has surged 31%. A look at the US markets now. The S&P generally higher today, still slightly below its record high. But investors largely shaking off the geopolitical tension, notably the face-off over Greenland, that worried markets over the past few weeks. That's after Trump toned down some of his threats on Greenland. We're expecting an interest rate decision from the Federal Reserve south of the border today. Let's get more from David Dietz, Chief Investment Strategist at Dietz Wealth Management Group. David, thanks very much indeed for joining us.
Andy, a pleasure to be with you today.
What is your call? Do you think the Fed will cut?
No, I don't. I think policy is going to be sitting tight. There's just a 3% chance, according to federal fund futures, that there would be a change. I think what's going to be a lot more interesting is the press conference afterward with Jerome Powell, because people are going to want to know, what does the outlook look like? What's policy going to be going down the road? And of course, he's under tremendous pressure from the president, from the Trump administration to lower interest rates. But I mean, we just saw a very strong GDP report for Q3. We've seen inflation not moving back down toward the 2% target. We've got stock market at all-time highs, and some indicators of inflation, perhaps like the precious metals and other commodities, are flashing warning signs as they hit all-time highs, even on an inflation-adjusted basis.
So the Fed finally halting the cuts because, as usual, the economy sends mixed signals. Hardly surprising with a huge and complicated beast like the U.S. economy.
Yeah, absolutely. Of course, we have to realize that whatever he says may be overshadowed because there's some rumors that perhaps President Trump announces his pick to replace Jerome Powell this coming week. Whoever he selects, however, I think market participants can take comfort in the fact that it will be a more dovish approach than Jerome Powell has taken. And guess what? Looser monetary policy, lower interest rates is really manna from heaven for stocks, at least in the short term. And so that's kind of a positive going forward here.
Broadly, how are you playing the market right now, David? Are you steering clear of some of the massive AI names, the so-called hyperscalers?
I think it's very appropriate here to be rebalancing portfolios, take some profits in some of those, the big AI names, mega cap techs, and join the trend, which we've seen now, of a broadening market. Add money to mid caps, add money to small caps, add money to sectors that have been left behind a little bit, including like healthcare, for example. And of course, the overseas trade continues strong. We're seeing some weakness in the dollar here today. That only helps create better value for American investors investing overseas.
And what is your feeling about, there's a lot of optimism about copper right now. I don't know if you spend much time on the mining stocks, but are you trying to own materials right now, lithium, copper?
Well, I think material stocks makes a lot of sense now for a number of reasons. One is we know the inflation genie has not been put back in the bottle. And of course, commodities as hard assets have historically been a good hedge against inflation. Second, of course, we know that these materials to greater or lesser degrees are all so important for the build out of the data centers, for the build out of the AI economy. They're also very important in terms of the greener economy and greener energy production and so forth. And ultimately, as this economy turns with lower interest rates and gets stronger, we're going to need more energy. We're going to need all sorts of types. So I do think that there is a big push in commodities and securing what we need.
We are going to get earnings tomorrow from Boeing and GM, two great American industrial names. What are your thoughts on those two stocks, David?
Yeah, absolutely. So GM is, I think, their stock has not fully reflected the great job that Mary Barra is doing there. Of course, there's been a little change in strategy. They've reduced their focus on EV. They're increasing their focus on hybrid. But I do think with interest rates coming down generally, with a little bit of relaxation in the tariff tensions, I think a company like General Motors can do well. I think their earnings are going to come in very strong. But of course, again, with all these companies, it's all about that outlook. And I think that she's going to give a pretty upbeat view on the outlook going forward here. Boeing, of course, linchpin for the aviation economy, our largest exporter. They have recouped their losses in some of their tragedies and so forth with some of their planes, of course. Now the question is going forward, what can they do? Strong competition from Airbus, of course, and of course they're right also in the focus of the disputes on the tariffs and so forth. But we are seeing, for example, just the other day now, an airline in Africa has put a big order in with Boeing. So I think longer term, we're very optimistic on Boeing as well.
You have some stock ideas for us, and I'm sorry we're tight for time, Dave. F&G, annuities and life, and they're big in providing fixed annuities. What attracts you to this name?
This stock is a bargain at about 5 times earnings, 3.5% dividend, well below book value. And I think it has nothing to do with their very robust business selling basically annuities and other low-risk insurance products. Most of the shares have been owned by a parent, Fidelity National Life. They have decided in their wisdom to unload shares recently, which has now doubled the public float. The float couldn't handle it. And so the stock has now come down here. It's down about 35% in the last year. I think that does not reflect the fundamentals. This is an opportunity to pick up a well-run company at a bargain price.
And Kraft Heinz, it's seen as having been a mistake by Berkshire Hathaway. It has struggled. A lot of these consumer or packaged food companies have run into headwinds, but you see value there in Kraft Heinz?
Yeah, I do. And again, this is almost echoes the Fidelity situation insofar as here, a quarter of the shares are owned by Warren Buffett, Berkshire Hathaway, and they thought it was a great deal 10 years ago. It has not worked out for them. Now they're talking about selling, but when you own a quarter of a company, you just can't just turn around and dump the stock. The stock is now under pressure. There was just a regulatory filing that is furthering their ambitions to start selling those shares. But again, you've got a 6.8% dividend, less than 10 times free cash flow for some of the world's most iconic food brands and so forth. They are planning to split the company up later on. So I think you've got a solid consumer staples play, which is now under pressure because of the fear of a fire sale by Warren Buffett's Berkshire Hathaway. I don't think they will do that. In any event, if you take a slightly longer term view, I think you do fine once those wins are past us. In the meantime, 6.8% dividend is not shabby.
And then finally, PayPal. What draws you to this one, David?
Yeah, so PayPal is one of your top fintech players. It's now trading for about 10 times earnings as people try and figure out where they're going to fit in the new e-commerce and AI agent commerce world. But they have just made a key acquisition of a company which is going to give them an orchestrated AI platform and allow them to take advantage to work their fintech magic in with some of the current AI models, including, for example, like Gemini, including like OpenAI, including like Copilot for Microsoft. So I think they are an experienced brand that is going to take advantage of these new ways for commerce, yet you were able to get in there at about 10 times earnings after the stock is down about 30% in the last year.
David, thank you very much indeed.
Thank you.
David Dietz, Chief Investment Strategist at Dietz Wealth Management Group. Coming up, we'll tell you how Nova Scotia is trying to prevent illegal fishing, which costs the industry millions of dollars each year. Nova Scotia is coming down hard on illegal fishing. According to the province, lawbreakers have cost the industry millions of dollars. CTV's Paul Hollingsworth has more.
Nova Scotia is cracking down hard on illegal fishing activities.
And hopefully it's enough of a dollar value that deters illegal activity.
The province is adding more than 30 new summary offenses which come with higher penalties. Among them, falsifying, altering, or destroying records. That now carries with it a $5,000 fine, twice that amount for repeat offenders. Buying or processing illegally caught fish is a $25,000 fine. A repeat offense will see that doubled to $50,000.
I was glad to see the announcement come out because it's one thing to actually hire the inspectors and to put them on the wharf to do the work, and it's the second thing to actually give them the tools to do that job efficiently.
Industry leaders are applauding the move after repeated calls for stricter enforcement.
We don't want to see anyone charged or apprehended, but hopefully that people will stay in line and adhere to these conservation measures.
Nova Scotia's Fisheries and Aquaculture Minister says 30% of lobster catches brought ashore go unreported, which means the province is missing out on $400 million in lost tax revenue.
Almost 20,000 Nova Scotians are employed in the industry. So if we could recoup some of that, even some of that $400 million, I think we'd be taking a big step in the right direction.
It's the lifeblood of Nova Nova Scotia. It's our #1 industry. So many coastal communities rely on it.
The province hopes these hefty fines will provide enforcement officers with the proper tools to stop illegal activities and protect Nova Scotia's fishing industry. Paul Hollingsworth, CTV News, Halifax.
Coming up, we are putting crypto in the spotlight on today's ETF report. Okay, let's get into the crypto world with today's ETF report. We are talking about XRP, which is it's called the native cryptocurrency of the XRP ledger. And that itself is a blockchain, which advocates hope will transform the world of financial transactions. So it's not just a straightforward crypto, this one, or it's got some wrinkles to it. We're joined by Steve McClurg, founder and CEO of Canary Capital Group, which itself offers an ETF that tracks XRP. Steve, just give us the quick potted definition of XRP itself. What exactly is it?
Yeah, great. Well, thanks for having me. XRP is a lot like Ethereum in a lot of ways, where it's a blockchain, or the XRP ledger is a blockchain that you can actually put other things on top of to transfer it. It was originally built to be a transfer mechanism for money, so that you can actually send remittances globally across countries. So the XRP ledger can actually send back and forth things like US dollars, Canadian dollars, British pounds that are tokenized, as well as other financial transactions.
And it is exciting that possibly we'll see some of the middlemen who extract fees in the financial system cut out here.
Yeah, that's exactly right. So at the moment, looking at when people send remittances worldwide, they usually use something like a Western Union or bank to bank. So your fees can be anywhere from 5% to 12%.
Wow.
And what this gives people the ability to do is transfer money around the world at a much, much lower fee.
So tell us about your ETF. I've got the Canary XRP ETF, symbol XRPC in the States, at assets of about $350 million US.
Yeah, that's right. So it's probably a little higher. Sorry, it's a little higher today.
Okay.
But we launched the first XRP spot ETF in the US, and we're very excited about it. We just launched this at the end of 2025. It ended up being the largest US ETF launch of 2025.
Right. Yeah, I'm showing that you launched it, I believe, in November, mid-November, but I may be out there. It is down about 17% since then, but of course we have seen some investors easing up on cryptos.
Yeah, we're seeing that too. A lot of it had to do with the basis trade that occurred over much of 2025, when the basis for Bitcoin and Ethereum began to drop. So a lot of people got out of the crypto markets, or have been slowly moving out of the crypto markets. There's also a lot of macro factors involved as well. But we've been pleasantly surprised to see a large amount of inflows into some of our most recent ETFs, such as the XRP, HBAR, even Litecoin in November when we launched these.
And I like this. Apparently, XRP involves burning a small amount of the token, contributing to a deflationary nature. So what happens? There's an automatic mechanism for reducing the number of units outstanding?
Yeah, that is correct. So it started off with a set number. And what happens is, over time, XRP tokens are certainly burned so that there's fewer out there in supply. And that actually helps, again, with deflationary. We hope that would happen with global currencies from central banks, but they just create more money.
And what makes XRP, and by extension your ETF, fluctuate? What would make it go up and what would make it go down?
Well, one of the biggest contributors really is investors and a lot of macro events. We've seen a lot of macro events recently, particularly in the United States, where auto default rates are very high, credit card default rates, credit card delinquencies, student loan debt. And it's really put a drag on consumers. And we've seen consumer spending drop. We've seen unemployment slowly tick up. And we've also seen just people investing less money, so less liquidity out there in the market. But speculation is one of the primary drivers at the moment on which blockchain is going to win. And I believe that several can win, and several blockchains do different things. And there's definitely category killers of each one. And I believe that XRP is the blockchain that is the category killer for financial rails.
Steve, thank you very much indeed. Steve McClurg, thanks for giving us the time. Founder and CEO of Canary Capital. Okay, coming up, our guest says AI is undergoing a regime change, and there could be good news here for Canada's productivity. We'll be right back. Prime Minister Mark Carney says Ottawa is launching what the Liberals are calling the Canada Groceries and Essentials benefit. Starting this year, GST credit payments will increase by 25% over 5 years. Ottawa will also provide a one-time special payment in June, equivalent to 50% of the GST credit. The move is being billed as an effort to tackle affordability concerns and make up for the higher level of food prices since the pandemic. Shares in CoreWeave surging. Chip giant NVIDIA is investing an additional $2 billion US in the company to help speed up an effort to add more than 5 gigawatts of AI computing capacity by the end of the decade. Under the collaboration, CoreWeave will be among the first to deploy new NVIDIA products, including storage systems and a new CPU. Shares in Skywater Technology and IonQ are moving higher. IonQ is buying the US chip maker in a cash and stock deal valued at about $1.8 billion US. IonQ will pay $35 US a share. We'll get access to domestic chip manufacturing tied to defense and national security. TSX trading once again in record territory, boosted once again by gold stocks after gold hit record highs at one point, trading above $5,100. The S&P 500 also showing signs of strength, up about 0.5%. For the past year and more, tech companies creating the building blocks for AI infrastructure, providers of massive computing capacity, have been the focus for many investors. However, attention is starting to shift to companies that can implement AI in their operations. Our guest says these changes bode well for some of Canada's publicly traded companies and may improve the country's lagging productivity. Let's get more from Kevin Kang, head of global economic research at Vanguard. Kevin, it's great to see you. And just to remind the viewers, Vanguard, of course, one of the world's great providers of ETFs, among other products. But I was amazed. I know you're not involved in the Canada business day to day, but you've got one ETF, the FTSE Canada All Cap Index ETF, with almost 13 billion in assets and a management expense ratio of about 1/5 of 1%. So you're known for low-cost products as well. When I think about those mutual funds with expenses above 2%, puts it in perspective. You're in the camp that says we're moving into AI Mark II, and the focus now will be on companies that implement this stuff profitably.
Yeah, good morning. And just before we move on to that, I would, I think there's one phrase that summarizes it all. It's called Vanguard effect. which basically is whenever Vanguard moves into a space, because that's what we care about, which is the ultimate investor's investment outcome and success, that has a way of having a lot of positive externality for the end investors. Going back to your original question, so we've been saying this for a while. AI, we kind of view it as really one of those epochal technological advancements that we don't get to see. Really not every generation gets to see and experience. But when we first saw AI and its capability, our view has always been that it can have that really era-defining potential to boost productivity, but also really transform the way the economy works and is made up, as well as the way companies go about generating profits and doing their businesses. So the way we think of it is that this is going to come in phases, and our baseline view is that it's really on track to bring that transformative boost to productivity, both in US and Canada, as well as many other economies. But the phase that we seem to be in for now is something that is reminiscent of many other technological cycles in the past, such as electricity, such as mass manufacturing after World War II, where there's an intense deepening of physical investment that happens just across the economy. So it's somewhat ironic, but AI is your ultimate cognitive power tool that we can all relate to having used it. And yet it actually calls for a significant historic capital investment build out. And then that is generating a lot of excess demand for, the old economy sectors, such as industrials, materials, and energy. And that has certainly showed up in stock markets like Canada's. It seems like it's continuing to show up both in the States and Canada.
You are a financial economist by trade. You've done a lot of research in active portfolio construction, household finance. Have you had much time to look into AI itself? Or even if you haven't, what has surprised you about this surge of excitement over AI as an economist?
So I think this just maybe goes back to what I mentioned about AI, that it being a once-in-a-generation thing, and its impact is going to be multifaceted, and it won't be necessarily everything happening all at the same time, all at once. It won't be necessarily that, but it's going to have multiple really innings and phases to it, the way in which it diffuses. The way we think of it is that it tends to create some sort of a binary reactions from just about everybody involved. Some people kind of look at its labor market implications and wonder, oh, is that going to be dystopian? Are human beings going to have jobs? And that's a very particular dark way of looking at that. And then the other on the other end of the spectrum, there are views that kind of suggest that, well, it's all going to be just nirvana, where all of us will be very productive and all of us will be able to reap the benefits of it. Our view is a little more measured, and it's maybe unsurprisingly somewhere in between. That it does have a lot of potential. If you look at people's jobs, any jobs really, and then look at all the tasks that people have to perform for their job, there are things that AI's capability is going to be a huge boon to productivity, just because you can automate certain things away and then you can help human workers do it better. At the same time, there are so many judgment-related tasks that just are simply still beyond the scope of what today's AI capability is able to replace. And that combined with how human labor, the complexion of human labor has evolved every time we had this type of an epochal technological advancement, gives us the idea that this time is in a way not going to be different, in that it'll be very disruptive. And certainly there will be pockets and segments that will be more disrupted than others. But at the same time, on the whole, its productivity impact is hopefully and likely will outweigh some of the downside implications.
Just to close up, I know that you and your colleagues have done work on AI productivity in the US economy. If you could just switch your lens to Canada there, you did warn about US demographic pressures. I think by that you guys mean an aging workforce. And you say generally you're looking ahead to a surge in worker productivity. There is a risk that AI fails to meet expectations. Is there a prospect AI will help our lamentable productivity growth performance in Canada?
And the short answer is yes. And here I want to maybe make 2 points. The demographic, the aging, and as a result, the labor force not really growing, short of a dramatic departure in immigration policy. That's more of a longer-term trend that we all have to accept and then get comfortable with. So that's a fact. The economy, any given economy that is aging, is unlikely to get a huge support from that channel. That said, I want to make this point that if you look at the Canadian economy, it still derives the vast majority of its income from anything that's related to services. So the services sector, despite all the headlines that we hear, and then even just the TSX composition of emphasis, and its emphasis on the physical goods related economy, the actual income is generated for the most part from services, very, very labor intense activities. And what that means is that the field is really ripe for AI to come in and then really help generate and unlock productivity enhancement. And that actually is coming at a good time if you think about the longer term demographic trend, because before too long, and perhaps Canada has been experiencing some of this, we would be looking for more workers, and we won't be able to find the suitable workers absent this AI-based technological and productivity boost. So in a way, it will be a very, very productive and very helpful tailwind. That's our view. And it's not a definitive thing. There's a lot that needs to be unlocked and then it needs to go well. But that's where over 4,000 startups are working day and night across the globe, but mostly in the U.S., to really unlock the productivity potential of AI.
We'd better leave it there. Kevin, thank you very much indeed for joining us.
Thanks for having me.
Kevin Kang, Head of Global Economic Research at Vanguard. Coming up, Hot Picks, we are zeroing in on the biotech sector, including one company that is working on treatments for autoimmune diseases. Stick with us. Time for Hot Picks. Our next guest has Spire Therapeutics as a top selection. He says the company is working on treatments for autoimmune diseases. Joining us right now, David Nierengarten, Senior Analyst at Wedbush. David, thank you very much indeed for joining us. Just remind us, we all know about multiple sclerosis as an autoimmune disease. Typically, they're called the immune system attacking our own body, aren't they?
Correct. Autoimmune diseases are caused by multiple genes and multiple environmental factors. One of the common autoimmune diseases is multiple sclerosis. Spire is working on several others, including ulcerative colitis, Crohn's disease, and rheumatoid arthritis and other related rheumatoid diseases. So there are, psoriatic arthritis is an example of that also.
And they have some possible catalysts coming up, 3 data events in Q2. Can you tell us about 1 or 2 of those?
That's right. So they have 6 for 26, as we're calling it. They have 3 actual data releases for their monotherapy studies, phase 2 in ulcerative colitis, 3 different drug candidates, but they're targeting known targets in ulcerative colitis. So we think it's a high possibility of success for those studies. Importantly, those studies should show that the drugs can be dosed once every 3 to 6 months, making it a lot more convenient than the current therapies out there for patients with this disease. And in the second half of the year, we'll see additional data for those other rheumatology diseases, such as rheumatoid arthritis and psoriatic arthritis that I mentioned earlier.
Apparently, this whole autoimmune area is being shaken up by this micro chimerism, whereby the body has cells from other people in it, and maybe they're part of the problem. I know it's very early days.
That is a theory that's been posited as a cause for autoimmune diseases for quite some time, particularly in women. When they're pregnant, women, do have cells from a new person, of course, in utero, and there tends to be in a lot of autoimmune diseases higher rates of those diseases in women, particularly women of childbearing and post-childbearing age, early, post-childbearing age. So in their mid-30s to mid-50s is a frequent increase in incidence for those diseases, again, in those women.
You have another idea for us. Disc Medicine, the symbol is iron on the NASDAQ. What are they working on?
So they're working on rare diseases of the blood system. So they have a product candidate that's in review right now with the FDA, bitopertin, for a rare disease called EPP. It causes a buildup of a metabolite that reacts with the sun to cause pain, actually a significant pain in patients in their skin, and can cause liver problems also. That's under review right now. And then they have a couple other drug candidates for either iron deficiency causing anemia or iron overload causing too high levels of iron in the blood and in other rare diseases and related diseases of myelofibrosis and other disorders of the blood system.
And then finally, Kiniksa Pharma, it's working on recurrent pericarditis, pericarditis. I'm very sorry. What is that ailment, please?
It's a very painful inflammation of the heart. So a patient will have an inflammation of this. Actually, there's a pericardium. It's a sac surrounding the heart. And that inflammation, as you can imagine, can cause severe pain. Patient might feel like they're having a heart attack, frequent trips to the emergency room with severe pain. And Kiniksa has a drug called Arcalyst that treats it very well. It reduces recurrences by 90+%. Patients are on the drug for quite some time typically, and that's really driven sales here. We estimate 900 million plus in sales in 26. And the company is a rare mid-cap or small-cap biotech that's profitable. They will have a positive EPS, and what is really going to trigger upside, in my opinion, for the shares will be their less frequently dosed, wholly owned asset, where we'll see some data for that in the second half of the year. That could literally double their profits if it were successful and approved eventually.
Because right now, I think you mentioned they're in a partnership with Regeneron, which stands to get some of the earnings from that drug you mentioned.
Correct. Regeneron gets approximately half of the profits. There's some adjustments for expenses here and there, but it's roughly half of the profits. And so obviously they have a wholly owned replacement, hopefully with positive data in the second half of the year that could lead to a drug approved with literally double the profit margin.
And there could be then acquisition in the cards if that all works out?
I would expect that. This is a very, again, it's a profitable franchise. It's well contained, meaning, you have a relatively limited sales force that can, go out there, sell the drug, limited, additional infrastructure required. It would be a great bolt-on acquisition for a mid or larger size pharma.
I've got to ask you, when you look at DNA and evolution, do you find yourself learning new things all the time? It's pretty amazing.
There are a lot of new things out there. The most exciting thing for me is really when we do see some of these new mechanisms get developed. I've been doing this long enough where I've seen some, targets that were, mere ideas, 10 years ago, and now they're, getting into late stages of approval or are already approved drugs, and it's really gratifying to see that.
That's pretty amazing. Whenever I read something, it looks like they're finding DNA is more complex in its mechanisms than they thought before.
There's a lot of complexities, autoimmune in particular. Some of the mechanisms for causing those diseases that we just talked about are are very complex. I don't think there's a single target, for example, for ulcerative colitis that will be the cure-all for everyone. I think we're going to need combination studies and combination therapies for that. But there's a lot of complexities in those diseases. Maybe we will find a single target that really leads to a much better drug candidate and approval.
Thank you very much.
We'll see.
David, thank you very much indeed. David Nierengarten is a senior analyst at Wedbush. Coming up, we're going to check out some stocks on the move, including Bombardier. We have seen selling in that name today after one of its aircraft crashed in Maine. In the face of U.S. tariffs, some consumers say they're keeping spending under control. But here's one place where we are seeing consumers opening up their wallets. In Newfoundland and Labrador, retail sales are up, and a big driver has been new car sales. Of course, this is a province where scenic drives abound. Newfoundlanders and Labradorians just can't seem to get enough of them. CTV's Garrett Barry tells us that story.
Now that she's retired with plenty of her own money saved, Paulette Sampson figured she'd get a fun car, one she really just wanted.
It is called Sunnyside Yellow, and so I bought it purely for fun.
Her Mini Cooper is brand new, just a handful of kilometers.
When we test drove it, we did it in the parking lot because it never had a permit. That's how new it was.
It'll stay that way until about April, when the salt, cold, and snow starts to disappear and the Sunnyside Yellow can shine.
My father was in a dealership, so I have a love for cars.
You can find that feeling just about anywhere in this province.
Went for a test drive back over the summer, and I instantly fell in love with it.
Just like Samson, Vince Gibbons said he could afford to buy a car that he truly wanted.
I bit the bullet, and it's been great.
But maybe it's not just desire. Maybe there's a reason why Newfoundlanders and Labradorians buy so many vehicles.
We probably drive too much. But it's easy to drive here too, isn't it, right? I can go anywhere and not really be held up in traffic.
Even one of the province's biggest transit advocates says most families really do need a vehicle of their own.
If I and my partner lived on any of the zip routes, the 2, the 1, the 3, or the 10, we would not have a car, period. But our area of town, the bus comes once an hour.
On a per-person basis, this province has been buying more brand new cars than any other jurisdiction every single month. Take May of last year, where purchasing here was at its highest. A Newfoundlander or Labradorian was twice as likely as someone from British Columbia or the Territories to buy a brand new car. All that spending is adding up, helping to push Newfoundland and Labrador's economy into bigger than expected growth last year. But what does it mean to have so many people driving alone on the roads with little human interaction?
When you force everyone to drive to a place, it becomes all about you and less about community.
His vision, a region where even the wealthiest choose to take transit, even if that goal seems far away today. Garrett Barry, CTV News, St. John's.
I do remember you don't have to drive outside St. John's very far before you see some gorgeous scenery. Let's have a look at the TSX and see how it's trading. It has hit a new record high today. And gold stocks, once again, are a big part of that, with gold hitting new records. Allied gold is being taken out by China's Zijing Mining. The premium is only about 4 or 5%, but Allied gold has had a magnificent run-up, like so many other gold producers, over the past year and more. And you can see, yep, oh, look at that, up more than threefold in the past year. And we talked to Peter Maroney just last week, and we interviewed him. Unfortunately, he didn't tell us about this takeover coming. Well, of course, he can't, I guess, until it's announced. But that stock's been rising. Allied Gold will shortly be opening a big new mine in Ethiopia, and it has one going in Mali. A couple of other gold stocks on the move. Aya Gold and Silver, the player in Morocco. Eldorado Gold higher, and Centerra Gold. But the group as a whole is up sharply. A tragic story involving a Bombardier jet, a private jet, crashed in Maine during a snowstorm, and 8 people were on board. Now, I haven't seen anything about if anybody, there were survivors or were lives lost. Goldman actually cut the stock to a sell. Haven't seen that report, but it seems like a rapid reaction. I don't know whether it was predicated on that crash, but obviously 8 lives at risk there, and I don't know if they've been lost. It was a Bombardier Challenger 600 and was taking off from Bangor Airport in Maine about 7:45 p.m. last night, Eastern time, or local time, last night. And and they actually closed Bangor Airport due to the incident. Let's have a look now at the U.S. markets. And the S&P still stuck below that 7,000 mark that it did briefly cross a few sessions ago. There is their market, very close to 7,000, and only a couple of points, only about 20 points down from its record high close on January 12th of this year. You can see the NASDAQ also higher. One stock on the move, Land's End, the seller of apparel, and brand management firm WHP Global have signed a joint venture agreement that will deliver $300 million in cash to Land's End. Land's End will contribute intellectual property and related assets to the joint venture. WHP pays $300 million for a 50% ownership stake and will lead the joint venture's global licensing and expansion strategy. That's interesting that Land's End gets a bunch of cash in its jeans here. CoreWeave attracting yet more money from NVIDIA. NVIDIA investing another $2 billion in the company. It has been a partner with CoreWeave for quite a while. CoreWeave itself, a cloud computing services provider that's building multiple data centers. And naturally, they'll be using NVIDIA chips. Thank you very much for watching this edition of The Open. Morning Markets is up next.